Volatility rising on red candles and dollars pulling back, and oil looks ready to ride down. Silver flashes a major signal, and large caps like Tesla, Apple, and NVDA just closed with a cough. Welcome to Daily Market Waves, time-basing angles where every candle speaks and every Elliott Wave whispers before the crowd even blinks. And we start as usual with Volatility Index. What we are seeing here today is quite interesting closure. So, for example, the index and the futures went up, but the candles were red. So at this point, this is neutral. This is neutral. We can see it was strong rejection on the 200 days moving average for the week for the index, and at the same time it was supported the 200 days moving average for the futures. So this is still undecided. We need to see what will happen next. At least for the index, we need to see a lower low with the red candle. Until we know this is neutral. And if we look at the weekly frame, just a reminder, the weekly frame closed with a lot of questions. So when the index itself, the VIX closed with a bearish candle, volatility was put at the final seconds and it closed with a bullish formation. And this is a very interesting position. Let's see how it resolves this week. So far, volatility is neutral. We are looking for the next candle. Now let's move on to the next, and this is dollar. Dollar is falling down. However, I'd like to say that after a bullish weekly closure with the candle and the 8-day closure also on Friday, this is kind of normal pullback. Let's see if it develops into something bigger. But at this moment, I am considering this as a neutral. We need to see a confirmation. Tomorrow, most likely, it will be the best for tall pairs to confirm this. And if we look at the chart, I'm not changing it practically. This is the same that we discussed on Friday and in our weekly updates. So this is the channel, and potentially dollar can wrap it up, this move, and continue higher to complete wave 3. So that's a dollar. Now let's talk about the bond market. This is where it's becoming interesting. So the candle today by 10-year yield and the other yields, I was looking at 20 and 30 years. So they all look the same. Potentially it's a hammer. However, from the candle's perspective, it could also be an on-neck candle, which is a continuation for bullish continuation. At this point, none of the major supports was broken, and we are looking for potential cancellation of this candle, while we might see a lower yields. And if we look at the bigger frame, for example, 5-day frame, which closed today, so this candle is very neutral at this moment, and I'm not taking any action because right now we need to see a confirmation for either path upward or downward. And just a little technical touch here, we have a freshly made bullish MACD cross on the yields on the 5-day frame, and also the previous candle formed an 8x20 EMA bullish cross here. On the 8-day frame, which is closing tomorrow, so far the candle looks bullish, and it is sitting comfortably on the 8-day 8 periods EMA support line. Let's see how it closes. If it closes at this level, then the 8-day will remain bullish as is, and we will be looking for higher prices, for higher yields, pardon. And this is a 20-year yield Elliott Wave perspective. So far, I'm considering this as a wave 1 of the bottom completed. Potentially this is wave 2, maybe it's a wave 2 extended here. So at this point, there are quite a few options until we see a clear confirmation. And considering the candle signals, I think that this pullback will be somewhat limited, and we will soon might see a next wave upward. So wave 2, with the end of wave 2 might move here. I have this bigger for wave for alternative wave 2 potentially forming a bigger flat here. However, the blue count right now is of lower probability. Now let's have a look at TLT. This is a very interesting party here. So we have a very after Friday's closing with a strong red candle. Obviously, we had a pullback, strong move down. However, candle is green, and TLT was able to recover the majority of losses that occurred at the beginning of the day today. And this candle is not entirely bullish until it is confirmed. So this could be an on-neck pattern somewhat, and we need to see how TLT works around this gap. From the 10-day frame perspective, the candle is neutral bearish. Again, we need to see a confirmation for this one. And on the 5-day frame, which will be closing tomorrow, this candle is neutral. Most likely it's gonna be neutral unless it moves towards the candle's high and even higher. This formation will likely leave the odds neutral. And the final chart for TLT, this is what we've been tracking for a while, for over a month, I think. And an impulse down, and the important move today, TLT made a lower low below the January low, which pretty much we were expecting for a while. So this was the expectations. April 30th, we discussed, then TLT formed the top. And now let's see how it develops here. So far, the wave down has been impulsive, and the chances for a move lower are higher at the moment. So this remains unchanged. The purple path is primary for now. Now let's move on to our commodities section, and today we started with gold. There is an interesting development. Gold pulled up today, and the candle is technically green. However, considering this build up, I cannot say it is a reversal candle. And we need to see a very strong confirmation closing above the high of this red candle, at least in order to see a reversal here. On the 5-day frame, which also closed today, the candle is neutral, leaning bearish, and an interesting closure will be tomorrow on the 8-day frame. You can watch this level. So this is level 322033. You write it here. 322033. Let me check it. 3202. Oh, okay. So that's 3202. Yes, this is the level to watch tomorrow. And if gold moves down and closes below this level, I would say that the bearish odds will gradually elevate on the 8-day frame, and this frame will become bearish. Now let's have a look at the technicals. As a reminder, we have a very strong bearish candle closure on Friday, and right now gold is trying to negate it, which is quite normal. And on the MACD crosses, we have 3-day cross and now a looming weekly cross. So if it happens in the next week or two, that would be a very significant bearish development. Speaking about Elliott Waves, this is still undecided because we have waves here, and so this in both directions we have we have corrective waves, and there is a possibility to form either wave 2 here or complete this wave as a wave 2 of wave down. And in this case, we still don't know. So this is a big question. However, considering the candles and the slowly building bearish momentum, the red count here has a slightly better probability. Well, now let's talk about the GLD trust. We remember that it closed the week with a bearish candle, falling below the necessary cutoff line by just a few basis points. The candle today is green, however, it's not high enough for considering a reversal. We need to see a bigger picture. So the 2-day frame formed bearish engulfing. If it follows up in the next 2 days and closes with another green candle, then we would consider this as a reversal. So far, it is not, and on the 3-day frame, it's still a challenging position here. We are looking for a breakthrough the 8 period CMA, which might not happen. So that's the perspective for the GLD trust. And now let's talk about silver. Silver today developed a couple of interesting signals. So first of all, I'd like to say that the weekly closure was bearish with a dark cloud cover, and it broke below the 8-week CMA. Now it's looking bearish. The 5-day closure today was bearish, somewhat neutral, but leaning bearish, and the daily candle today was somewhat neutral. But this is not the most interesting part. So this is the most interesting part from my perspective. So this is the 15 days frame, and this is the MACD. I would like to say that we have a freshly made cross. So the silver attempted to make a cross. Although this candle it's a long one, and it will be closing on June 3rd. So if on June 3rd we still have this cross, it will be considered completed, and we would be looking for a serious decline, somewhat similar to what silver did in 21-22, in years 2021-22. Well, I discussed it in our weekly update with better precision and the probability. So if you're interested, you can watch that video. Speaking about Elliott Waves, silver is not clear at all. So we have corrective waves up, we have corrective waves down. So most likely silver is moving horizontally. That's why I have so many potential counts here. So it could be a blue one, it could be a red one, and also there is a chance for a green one. However, considering the candle and technical formations, the green one is less probable at the moment. So we are patient, we are looking for horizontal development until we see a breakout or breakdown with an impulsive wave. And for the silver trust SLV, it also closed the week with a bearish candle. Today it is forming, it's not formed yet, but the previous 3-day was a clear confirmation of a reversal. And if on Wednesday the current candle closes as a red one, so we will see a continued move down. And for the daily frame, the candle is neutral. Now let's talk about the energy sector, and we will start with natural gas. So there are no questions here. So technically the candle today is bearish, and it's a freshly made 8x20 EMA bearish cross. After the weekly closure, it's natural to see a move like this. However, I'd like to warn that hourly frame, 1, 2, 4, 5, 12 hours, they are grossly oversold. And a bounce is due, and this bounce could become a rally. So just be careful. And this is the chart that we've been tracking for a while. So now we can see that natural gas arrived into the target area, and I would be looking for a reversal point at any moment. So let's see what happens next. So, well, the candle is still bearish and the signals are bearish, but the risk of a reversal here is quite high. So the next one is oil, and we will talk about oil candles. So that after the confirmation of the top here, oil formed two green candles. However, today it wasn't able to hold the price at the top at the high of the day. If it closed like here, it would be a reversal and we would be looking for higher prices. Unfortunately, this is not, and now it is looking more bearish than bullish. And speaking about the 10-day frame, which will be closing tomorrow, we can see this potential flag formed here. I'm talking about this one. So if it's done like this, we would be looking for the next move down. And the weekly closed also with a bearish candle, although it had a chance to form a bullish reversal. So far, the odds are bearish for oil. Now, from the Elliott Wave perspective, this situation is not exactly clear right now because we have an impulse down and we have a corrective wave up. However, it could be an expanding diagonal and it can push the price higher towards this rectangle again. However, a more natural wave would be something like this. So 1, 2, 3, 4, 5. It could be an impulse. Let me change the degree here so that we can see it. So this would be my preferred path at the moment, considering the candles and considering technical indicators. We discussed oil larger perspective in our weekly reports and also in our weekly videos. If you're interested, you can also watch them. So a quick checkpoint: if this breakdown has helped clarify the direction or risks, let me know by tapping the like button. It's a small signal, but it helps more than you think. Now back to the charts, and let's have a look at Exxon, Chevron, and Conoco, how they closed today. Unfortunately, they closed with strong bearish candles. As you can see, this Exxon pushed the price just below the open by a few basis points. Chevron made a confirmation. Technically, this is the bearish confirmation. The next move is likely to be down. And another strong confirmation of a dark cloud cover for the ConocoPhillips company. Well, it looks like oil sector is set for a ride down. So now let's talk about the next energy element, uranium. And just a quick reminder, we offer a full written analytics package through our ultimate subscription. Every setup, every wave chart, every big picture signal we track. If you're interested, just check our website investingangles.com and you will find whatever you are looking for. Now let's talk about uranium. So far, uranium looks bullish, and as I discussed in the weekly reports and in the weekly videos, most likely the pullback was just a minor one, and we would be looking for the next wave higher, and the same for the weekly frame. And after 8 days after uranium ETF URA formed 3 black or 3 white soldiers on the 8-day frame. We are looking for continued rally here. Speaking about energy fuels or quad U, an interesting formation today. First of all, this candle most likely is bullish, and we have on a 2-day frame, we have a very nice bearish failure. So this candle closed exactly at the level of this candle's low, of the green candle low, and now I'm looking for a reversal here. The same thing can happen tomorrow with the 5-day fair frame closure. If it's not confirmed a bearish, if the bearish reversal is not confirmed here, we will be looking for a bullish path. And this is the energy fuels Elliott Wave map. A strong impulse of the bottom, an extended wave 2, which already hit the target, by the way, today. And if you're looking for another strong move upward, then it would be approximately the target. But once we have a reversal pattern here, we will measure the target. I think it's going to be somewhat between 6 and 7, maybe 7 and 5 dollars. Okay, and for CCJ, I'm not showing the chart today, and everything remains the same as we discussed in the weekly video. No news there. And the final discussion of today is the stock market. Let's talk about it, and we'll start with S&P 500. So this is the candle's closure today, the daily one, and I don't have any concerns. Generally, this is a bullish closure for S&P 500. For Nasdaq, it's also bullish one, so it's just a few basis points above the high. So no concerns here. And the Dow Jones, the only little concern is Russell, but considering all indices, most likely this is bullish until we see a strong reversal candle. If we look at the futures, there is a little concern about Nasdaq and Russell. Despite their rallies, so they were not able to form to close above the high of the previous candle, and this might be a concern because we have it's technically a double failure, because on Friday we have an inside candle, and now this candle is technically also an inside one for this big doji that Nasdaq formed on Thursday. Let's see how it develops tomorrow, but while S&P 500 is bullish, Nasdaq is somewhat neutral. And the interesting thing, the most interesting thing that happened over the weekend upon the opening is this. This is the 200 by 100 days moving average death cross for Dow Jones. And right now we can see it is expanding. So I discussed it with in details in one of the previous updates for our members on the website, and if you're interested, you can have a look there. So there is a very interesting historical perspective for this. If Dow Jones follows the path this time precisely as the last one, well, that would be a very interesting and entertaining move. Let's have a look at the bigger charts. So this is the weekly. The weekly technically closed with big green candles, and today we can see that 8 by 20 EMA weekly moving average is crossed for Nasdaq, for QQQ, and SPY. Well, if this one holds until the end of the week, we will see a very strong reversal, bullish reversal, and most likely it's going to be the beginning of the flight towards new higher highs, and a couple of 100 points could be done easily if this happens. However, let's see how it closes, how the week is closed. Now let's talk about technicals. So this is MACD bearish crosses on the monthly frames for all four indices. Well, from the candles perspective, we have a bullish signals. From this one, we have a strong bearish one. Let's see who wins by the end of the month. If these crosses stay, well, then the chances for a continued move down will be higher despite the bullish closure. But let's see the final print first. Now let's talk about Elliott Waves. So this is Elliott Wave for S&P 500. This is the perspective target for the wave if this is an impulse. Let's say in the green count 1, 2, 3, 4, 5. However, I have a lot of concerns about this wave being an impulsive wave. Specifically, they come from the structure and the character of the very first wave of the bottom, which was clearly corrective. And right now, the wave itself, this big one, is not very strongly impulsive, I would say, but let's see how it develops. At this point, I'm having this red counts and purple on the chart as well. But once we have a move towards a new all-time high, new top, then both red and purple will likely be invalidated. And this is the chart. This is the micro chart, 1 minute chart. And I just wanted to discuss it. So this is possible. This is a possible impulse down for, this is possible impulse down. We can see all impulsive waves here. So this is a possible impulse down. This, if this wave develops like this could be a possible impulse up. So this is wave 1, 2, potentially 3, 4, and 5. However, we must remember that it could also be a zigzag wave, because zigzag contains of impulsive waves. So it could be something like this, especially if we see a strong move here and a reversal below this high. This would be an potential zigzag formation for a move lower, and after that we would be looking for this move. Let's see how it develops. So basically, if S&P 500, it might happen overnight. If the futures break through this high, which is Monday's high today, then we would be looking for a continued move. If, however, we see an impulsive wave or something like or similar wave down, very strong one, breaking especially below this this level, then we would be looking for a potential correction. Now let's have a look at the sectors. Sectors are looking very nicely today. Financials, they didn't close at a new high, but the candle is looking good with some indicator support. Industrials, technology is kind of concerning. That's I would expect it to be higher in general. And all other candles except for energy and maybe for consumer discretionary are bullish. Well, that's a good perspective for tomorrow, but let's have a look under the hood. So this is large caps, and I want to bring a couple of concerns here. So while Amazon today closed with a green candle, this green candle wasn't strong enough to form a piercing line, so it ended with a thrusting line. And if we look at the 2-day frame, After a strong bearish engulfing, we might see consolidation before moving lower. So Amazon is number one. Apple. The candle itself is somewhat neutral, and it could be a reversal one. However, if we look at the 2-day frame, this is technically a bearish reversal candle on the 2-day frame. So the next 2 days will likely be red for Apple. Tesla, this is the most concerning one. The daily candle is green, absolutely green, and everything looks fine here. However, the 2-day frame, that's a very concerning development. We have a doji, and we have a bearish engulfing over this doji. I would say that Tesla are in big trouble or under high risk of moving down here. And a similar thing for NVIDIA. Hanging man within the body of the previous candle, and again, if you look at the daily closure, it was just a thrusting line, not a piercing line, which would be bullish. So let's be monitoring this, and if we see confirmation in the next 2 days, it would be a very interesting discussion. And speaking about the Buffett's company, it formed a very strong bearish hanging man. At the same time is a harami candle, bearish harami. If we see confirmation in the next 2 days, in tomorrow, then it would be a continued move down. And we were talking about Berkshire quite a few times and shared also the perspective targets. And the final discussion today is Nasdaq. So what we are seeing here is technically the same, very similar Elliott Wave formation, a corrective wave of the bottom, wave B or 2, and potential impulse being formed right now, although the impulse is not very well defined, I would say, by the waves. And what I'm looking here is that if we see a move towards all-time high and a break through the top line, then the purple and red counts will be invalidated for this move, and we will be looking for a green perspective. However, I would still be looking for an ending diagonal, most likely, because of the structure of these waves. And just another comparison here. So this is technically a very similar situation that Nasdaq was doing here. So now this wave is just slightly bigger. So we have a bigger fractal. As you can see from the top, it formed most likely a diagonal. Then it was waves A and B, and then another wave here, WX and Y. So similar to this, so it pulled almost to the top and then it fell down. And it formed an impulse, by the way. 1, 2, 3, 4, 5. I still consider it as an impulse. Here is very much the same. So we have a bigger wave, A or 1. And now we are looking for this wave, which is pulling almost to the beginning of the initial impulse down. Well, if the history repeats here, then we would be looking for quite a wave down. But at this point, I would say that candles and technicals are bullish short term, and until we see a very, very strong reversal, the odds remain bullish. And now let me wrap it up. So markets climbed today, but under the hood some cracks are forming. Gold's post, natural gas oversold, be careful there. Oil, buckle up. Silver, don't miss what's coming. But we have to be patient. If you need wave charts, setups, and momentum signals before they go mainstream, visit investingangles.com. New users get a special entry discount on our ultimate package. And in the swing room, master trader David nailing the turns again with surgical precision. If you didn't try it, well, you might miss a lot. Subscribe, hit the bell. Without it, YouTube won't alert you about new videos. If you like this video, just say so. Tap the button. Drop your tickers in the comments and share it on X, Reddit, Discord, or wherever smart money gathers. If you found value, tap super thanks. It helps more than you know. At Investing Angles, we don't follow the market. We forecast it before the crowd even blinks.